Good evening everyone and welcome to Admiral Markets webinar. Today is 15th of April 2015. My name is Nenad and today we will talk about Forex correlations. And generally Forex correlation is widely used in Forex trading. I will show you how to use it properly. And fortunately enough, here with Admiral Markets we have a good tool named Forex Correlation Matrix, and all users of Admiral Markets Supreme Edition have access to Forex Correlation Table. So this is very important if you trade with more than two pairs, and especially if you trade with different pairs such as minors and majors in the same time. So before we begin, our standard risk disclaimer. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for a trade. These are not TBK's opinions, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. So, with having said that, let's just give you a quick reminder. You all know about Admiral Markets bonus campaign. Well, it will end, I think it will end in the last day of April. So during this month you have also the possibility to open new account, or with existing account you can get up to 50% bonus on deposits, and you need to make 0.25 lots per each euro bonus, and you have 180 days to complete. You all know what I think about this. This is a great opportunity to expand your margin, okay? So if you make this bonus, if you have the bonus and you complete the bonus campaign, then guys, do not withdraw the money, leave it, because it will expand your trading. Today we will talk about correlation, specifically what is Forex correlation, examples of Forex correlation, and how to use Forex correlation. And I will specifically be referring to Admiral Markets Supreme Edition, because that is the tool which I personally use to find a correlation. It is a great tool, and it is of a very big help, especially, as I said, if you trade with more than 2 or 4 pairs. That is very important, because every single Forex pair is in correlation to another, okay? Now, when two sets of data are strongly linked together, we say they have a high correlation. For example, when two pairs are moving in the same direction, we say it's a high correlation. Correlation can be low, moderate, strong, and very strong. Okay? We will be paying attention to that during the webinar. When pairs are moving in the same direction, we say it's a positive correlation. And when they move in opposite direction, it's a negative correlation. Okay? So do not be confused with high correlation and low, because low correlation, moderate, strong, and very strong correlation can be either positive or negative. Okay? The important thing is that when two pairs are moving in the same direction, we call it a positive correlation. But when they move opposite, we call the correlation is negative. Okay? That is very important, guys. Okay? Because some pairs can go in highly negative correlation, that means, such as euro dollar and dollar Swissy. So they are moving in the opposite to each other, okay? Perfect correlation happens when pairs are moving 100% in the same direction, but as we can see, it's very rare Okay? We say that correlation is high when pairs are moving above 80. Okay? We use now Admiral Market Supreme Edition, so it will show 80. But I can also witness, because I have tested it, that pairs which are moving above 50 are also in a good correlation. Okay? I will also show you how to use the matrix. Correlation is negative, highly negative, when the pairs are moving above minus 80 or minus 50. They are in a negative, strong correlation. Usually, this is how correlation looks like, and I specifically say this is a usual Forex correlation. Do not forget that correlation exists on each single time frame, and do not forget that correlation table can usually show you opposite sets of data. Okay? Because if you open 4-hour time frame, maybe on 4-hour time frame, the correlation won't be the same as, for example, if you do it on 1-hour time frame. Conversely, for correlation on 30-minute time frame will not be the same for 1-hour table. So you need to distinguish between those correlation tables, okay? So it can be either positive or negative, but be aware, guys, be very aware that correlation can show different sets of data on each time frame, okay? For intraday trading, we are using, of course, 1-hour correlation table. Same direction moving pairs are euro dollar, pound dollar, euro dollar, New Zealand, dollar Swissy, dollar yen, Aussie and GBP Aussie, Australian dollar, euro. So those are usual correlation, and I say it can be either positive or negative, but usually they move in this direction. But that is why we have a great tool to use, and be sure to check correlation once per day. If you are trading on intraday time frame, then definitely, guys, use correlation table. There is suited for intraday, and that is, you already know, that is 1-hour time frame. Okay. Okay. So this is very important. Remember that correlation exists on each time frame. Okay. How to use Forex correlation? Exactly, guys. By using Forex correlation, you will be definitely having a good chance to basically eliminate high risk trades. Double exposure, what does it mean? For example, opening 2 or more positions that are highly correlated is not advisable. Why would you, let's say, why would you open your positions on Australian dollar Swissy, Australian dollar yen, and euro yen if they are highly correlated? It will mean that you trade double position on Australian dollar, and that means that you have been double exposed to Aussie movements. For example, same goes, for example, with euro dollar and pound dollar. If euro dollar and pound dollar are correlated strongly or or very strongly correlated, highly correlated during the particular day, that basically you will be trading dollar weakness or strength. So by trading euro dollar and pound dollar simultaneously, you would be double exposed to dollar movements and news. What does it mean? That means that you are basically trading dollar weakness or dollar strength. So if you see that pairs are moving in same correlation, in the same direction, usually one pair is enough. Now, definitely, if you want to open 3 or 4 pairs at the same time, and you're listening to your technical analysis, it's always best that you have pairs which don't go in any specific correlation. So usually that means that you will definitely be avoiding double exposure. Now, unnecessary hedging, opening two same position on a negatively correlated pair is also a form of hedging. For example, think about it as a long on euro dollar and long on dollar Swissy. That is unnecessary, guys. Because if you win on long on euro dollar, that means that you will definitely be losing if you longed dollar Swissy, because they are negatively correlated. Listen carefully to what I'm saying now, because this can definitely help you when you make your trading decisions. It's stupid, right? If you open long on euro dollar and long on dollar Swissy, that's called an unnecessary hedging. You definitely don't need to make any unnecessary hedging, believe me. Also, guys, eliminate higher risk trades. Euro, dollar, and pound usually have a strong positive correlation, guys. Usually strong positive correlation. Opening a long position, as I already said, for each pair would be like taking euro, dollar, and doubling your position. So you would be basically making use of big leverage. It's okay if you're right, but if you're wrong, double loss. Same if you spot euro dollar falling and GBP dollar ranging. You would stay out of GBP dollar longs because GBP would probably fall in next few hours. Now, since you already know that euro dollar is positively correlated with pound dollar and negatively correlated with dollar Swissy 90% of the time, you can check to see if the other pairs are moving in the same magnitude as euro dollar. So you can always use euro dollar, pound dollar, dollar yen compared to other pairs. Or if you mostly trade euro dollar and pound dollar, you can also compare it to different pairs and see if they go with high correlation or they don't have a correlation. For example, just for example, if euro dollar and pound yen are having a positive correlation, it's safe to assume that you can take both positions. Because if euro dollar goes up, it doesn't necessarily mean that pound yen will go up. Maybe they're not highly correlated. We need to check that, remember. And if they're not highly correlated, first you would be avoiding double exposure. You won't be doing unnecessary hedging. And definitely, guys, it will be mostly up to your technical analysis. Euro, dollar, pound, yen. Maybe they're correlated, maybe they're not. Let's see, open the table, we see that they are not correlated, so basically you're not double exposed to dollar movement. You can always check that. And breakout confirmation. You can use correlations to confirm your trade entry or exit signals. For example, let's say that euro dollar or pound dollar, it doesn't matter, test significant resistance. If you remember my analysis from yesterday, I did analysis of GBP dollar, pound dollar, and I specifically said that if 47.45 is broken to the upside, that will be bullish breakout, but also, guys, that will be basically a possible trade of 47.45 and possibly a reversal of the trend. And if you carefully read what I said yesterday on pound dollar analysis, you could have seen that I specifically said if it stays above this level, it will be neutral to bullish. It happened today. But the main reason is that you can check correlations to see if there is a breakout or false breakout. Okay? So let's say that GBP dollar is negatively correlated to dollar yen. And if GBP dollar is at significant resistance, it tends to break it. And dollar yen is also to very significant support. That means that we have impending breakout and that probably pound dollar will break the support resistance and dollar yen would break the support. Okay? That's a good thing to know. Because usually that means that correlation matrix is working as it should, and it can give you a double Q, additional Q to enter position. Okay? At least one position. I'm not saying that you should take both positions, long on pound dollar and short on dollar yen. You take only one position because you won't be double exposed to currency, to dollar movements. Okay? And remember, Forex correlation change. Okay? They change. They are not always the same, so check it regularly. This is how correlation matrix look like. This is Admiral Markets tool. If you install Supreme Edition of Admiral Markets, you can have this tool at your disposal. I really need to congratulate Admiral Markets team of programmers, which did excellent job coding different useful things within Supreme Edition, and this is the tool I use every single day when I trade. I don't need to look on other various websites and try to spot correlations. I just open correlation matrix and I can easily see how correlation matrix looks like. I would usually use 1 hour time frame. And Justinas is saying, agree, there are some really good things on Supreme Edition. Yes, just to make a little digression, guys. During this month, I will be also having a webinar. Be sure to sign up for that webinar, how to set up your trading room. And I will tell you few things, how you set up your trading room, your own trading room. How you should use multiple monitors, which tools you should have, which programs you should use. So be sure to sign up for that webinar. It will be unique. It's a little bit different from our current set of webinars, and it's definitely good for you to know how to set up a proper trading room. And I don't think about programs. I also refer to space. Okay? Space management, real room, real house. Okay? I will tell you how to set up a great trading environment. So sign up for that webinar. And now let's get back to correlation matrix. You should change this to 50 bars. This is how I check correlation, because it goes 50 bars in the past and there is approximately 2 days of trading to see within the correlation. Don't forget, we are mostly intraday traders, so we need to see what correlation is for last 50 bars most of the time. 2 days of trading, right? Effectively. Okay, when you do that, you just need to check the correlations. These are correlation matrix. And notice different colors and notice different numbers. Okay, now I will explain what that means. So, this is one part of the matrix, this is another part of the matrix. For example, you want to compare euro yen to euro dollar. You just need to take a look at this quadrant here. It says plus 75. It's orange. That means that correlation is strongly positive, guys. And euro dollar and euro yen would definitely move in the same direction. So if you open euro dollar trade, be aware that if you want to open euro yen, that they will move in the same direction. Okay? But if you open euro dollar trade and euro New Zealand trade, guys, look how this is interesting. We both have euro as main currencies here, right? And look at this, euro, but they don't go in any correlation. The correlation is low. It's green and it's -8. It tends to be a negative, so maybe they will be moving a little bit in the opposite direction. But opening both euro dollar long and euro New Zealand long will not have any impact if any of those trades goes in the opposite direction. If euro dollar goes suddenly down, it doesn't necessarily mean that euro dollar can, the euro New Zealand go down. It can go up also. So that is a good thing. So green quadrant is low correlation. Blue quadrant is moderate correlation. Orange is strong correlation and red is very strong correlation. Anything which shows me above 50, I tend to look at, especially if I'm trading, and I usually trade different pairs during the session. So I pay attention mostly to orange and red correlation. Because when I see that there is a green quadrant, that means that pairs don't necessarily move in the same direction. I can have both longs and shorts. It doesn't matter. For example, looking at GBP dollar, I can see that GBP dollar and Euro CAD are very low. They have low correlation. It tends to be a little negative. So initially, if GBP dollar is up, Euro CAD may go down, but it soon can also go up. Then down, then up. But they are not moving in the same direction. And it's good, because I can take profits from GBP and then I can take profits from Euro CAD. But what if I open position on GBP dollar and Euro Swissy? They are moving in the same direction most of the time. Look, plus 90, okay, this is with Euro dollar. It's totally strong correlation with Euro dollar. So that is why I avoid opening GBP dollar and Euro dollar position in the same time, because I would be double exposed to dollar currency if I do that. But if I open GBP dollar with Euro CAD, I only have minus 15. So that is a low correlation. It tends to be a little bit negative. Good. It will go. If I open with Euro Swissy, then that is maybe a problem. Because if I have a long on GBP dollar, most of the time during this day, Euro Swissy will go in the same direction. Well, what if I'm wrong with GBP dollar? It can go, but usually it will follow it and it will be a double loss. This is moderate correlation, blue quadrant. So if you see moderate correlation, that means that those currency pairs can move in the same or the opposite direction most of the time, and it's how can I say, in next 15 minutes they can go in the same direction, but then in next 30 minutes they can change direction just to be followed by the same direction again. So basically it tends to be a balanced out. Okay, it doesn't necessarily mean that the pairs will go in the same or opposite direction, and that is particularly good, that because then you can also take some trades. And be sure to monitor your trades when you see also correlation with blue quadrants. Now, I know what some traders do. They open simultaneously a lot of highly correlated pair. That means that they are using basically the leverage. So opening GBP dollar long, Australian dollar long, New Zealand dollar long, let's say Euro Swissy long. It means that, look at this, guys. You need to check it out. GBP dollar plus 90 with Euro dollar. Now, Euro dollar has plus 80 to Australian dollar, and Euro dollar has plus 70 to New Zealand yen. How strange is that? You will be basically using one trade for 4 leverage trades. Pay attention to it. It's very important. Sometimes, guys, very often, if you trade multiple pairs, you will be seeing, for example, you want to trade GBP CAD, but then because this is a minor pair, this is not a major pair, you can see that most of the time GBP CAD does not have a strong correlation to any of those pairs. So sometimes you can see that minor pairs can be traded good with other minors, but major pairs tends to be highly correlated in between themselves. Okay? So use this matrix to your advantage. For example, today I have traded New Zealand yen. I will show you the trade. I hope that you took the trade, because eventually the trade went somewhere from 30 to 50 pips in profit. And if you traded New Zealand yen as I showed you today, basically you could have made some nice money. Great, Modris says he did take the trade. That was the analysis I did for Admiral Markets Forex Street, and I also published it on Forex Factory. But the thing is, yeah, New Zealand yen, guys, is pair which has a positive correlation with euro dollar. And if I followed basically what I did today, I knew that if euro dollar goes up, it will definitely kick New Zealand yen trade to the upside. And what happened? Euro dollar went up. You saw the spike, huge spike to the upside. And New Zealand yen initially went up with euro dollar. So it's good. Look, it's positive correlation. It's good also if you analyze, for example, euro dollar. You see it's positively correlated to New Zealand yen. So you will be saved from taking, let's say, short trades on euro dollar. Because if euro dollar goes up, you know that you won't be trading New Zealand yen to the short side. Now this is how you should use this tool which Admiral Markets give us. Really, this is great thing. This is especially good thing. And I was also telling Admiral Market staff, they asked me specifically what I would suggest that they should put into Supreme Edition. And I told them, guys, put correlation table. This is what every serious trader should have as a tool. Okay? So, the question is how we can, Stella is asking, how can we get this correlation all the time? Stella, you need to have live Admiral Markets account. Then, when you open live Admiral Market account, you just need to go to your trading room and download Admiral Market Supreme Edition. Then you will find it under Experts. It's called Correlation Matrix. You just need to open Correlation Matrix, and you will see it's great, really. Okay. Now, this is how you should also manage your correlation tool. You just need to click 1 hour. For 1 hour, it's intraday correlation table. Then click this to change from 200 to 50. And then here at this field, you can enter the symbol name. And once you click, let's say you can put it here, New Zealand yen. You just type New Zealand yen. And you click add. Instantly, New Zealand yen will be added here to the bottom. And you just need to click save. Okay? And look at this. I typed New Zealand yen, I clicked save, and it basically went here below the last pair. Okay? So this is a great tool, and you have sliders to use, so you can move it up and down, and this will stay the same, so you can see it through various correlations. This is the example of a negative correlation between euro dollar and dollar Swissy. At the time, while I have basically took a screenshot of this chart, correlation was minus 91, okay, minus 91 for dollar and dollar Swissy, euro dollar and dollar Swissy. Look how those pairs move, minus 91, completely, totally negative, okay? This goes down, this goes up, okay? Now this is, at this time, it was 76 positive correlation between euro dollar and pound. So this is euro dollar and this is pound. Good correlation. Euro dollar went heavily to the downside. Pound dollar went to the downside, but not as heavily as euro dollar did. Because correlation is 76, it's not 90. If it was plus 90, probably pound dollar would go also like this. Okay? Now this is correlation table. Yeah, I should have put euro dollar here, but basically it would show you the same. Euro dollar and New Zealand yen went together in the same direction. Let's see, let me pause the screen if I can quickly copy this to my, maybe I can show you right now a euro dollar chart. Okay, here. Yeah, look at this. I will show you this tool I use here. Let me quickly switch the screens. Okay, this is the screen. So this is euro dollar. Observe how it behaved. Observe the price action. It was ranging. Then look at this. It went quickly to the downside and upside very fast to the upside. Look, euro dollar. And now compare this to New Zealand yen. Okay? New Zealand yen. Look at this. Also the same as euro dollar. It went up, guys. Why it went up? Because euro dollar correlation and New Zealand yen correlation was red and it was strong. Yen is asking, sir, I have tried twice to get audio, but I have none. I left and re-enter. What to do? Yen, please check your audio setup. I don't know what can I say because you should have audio. Audio is fine. I don't know what can be the problem. Probably you didn't configure your speakers correctly, but try to. Now I'm talking to him, but I know that he cannot listen to what I'm saying, so try. I will type try to it right through Windows or the program itself. I don't know how to help him, only this. So where I stopped. So euro dollar and New Zealand yen moved completely in the same direction. Look, first of all, the quadrant was red. Okay. This webinar will be uploaded and it is recorded, so you can listen to it again. Okay, so guys, euro dollar and New Zealand yen were moving in the same direction throughout this day. That is why I'm putting 50 bars here. If you change it to, let's say, 200 bars, these numbers would be different. So basically, it's a red quadrant, it's high correlation, and look, when euro dollar went up, it went good for our trade because it rejected from this point, guys, and it went 50 pips in profit, as our analysis showed. Look the correlation between GBP dollar and Euro New Zealand dollar. So again, I'm saying this can save some of your trades and trade setups if you don't know what to do. GBP dollar and Euro New Zealand basically go in the opposite direction, guys, right? It shows the opposite direction. This pair, pound dollar, goes up, okay? And this pair, it goes down. So you would think twice if you try to open two positions, one on GBP dollar and one on Euro New Zealand. Okay? Why? GBP has, as it shows, moderate but negative. It's blue, but it's minus 40, guys. It's very close to minus 50. It's not minus 20. This is not so strong correlation. But look, it's very close. It's on a margin from a moderate to strong correlation, because above 50 it's a strong correlation. So this number is negative, and it means that GBP dollar and Euro New Zealand would definitely move. It can go, look, as this candle showed, a little bit in the same direction, but then it will turn opposite. They will move in the opposite direction because the correlation is at the verge to be strong, negatively strong, okay, the opposite direction. So the third candle went up here, this candle went up, but then it was dropped because the correlation is not minus 60, let's say, or minus 70, it's minus 43. So the pair can go correlate in the same direction in pound dollar, but it will not last for long. It will be short-lived. Usually when correlation is minus 40 plus, at some point the pairs would go in the opposite direction. And if the correlation goes to minus 50, they will start to move oppositely. If it goes above minus 70, then we would be, usually price action would be mirrored. It would go completely in the same direction, in the opposite direction, minus 70. It's called mirroring of price action. Now, how to use this and where to download it? Log into your trader's room, look for AM Supreme Edition, download it, and find it under experts. Okay, under experts. That is how to use Forex correlation, guys. So this is everything I have prepared for you today. Now it's very important for you to know how correlation table can help you and how correlation is used. Now, guys, if anything is not clear, I can answer your questions, but this is pretty straightforward. I am sure you won't be having any problems with using this correlation table. For all of you who entered a little bit later, I will remind you again. This is how you should read correlation table. Green means that the correlation is low. There is almost no correlation. Blue means that there is a moderate correlation between the pairs. And if the blue is starting to be very close to 50, here, that means that it can suddenly change to being a strong correlation and the pairs will move in the same direction. Okay? Then orange correlation is strong correlation. Usually strong correlation means that the pairs will have most of the time on intraday charts, because we need to put 50 bars here in the settings, the pairs will move usually in the same direction. For example, Euro Yen and Euro GBP. Euro Yen goes up, Euro GBP will go up, not in the same number of pips as Euro Yen. Maybe if Euro Yen goes 50 pips, Euro GBP will go 25 pips, but in the same direction. But if you open GBP dollar and Euro dollar, if GBP is moving 60, 70 pips, Euro dollar maybe will moving be 50 pips, right? Will be moving 50 pips. So that means that the pair is mirroring, that the pairs are mirroring each other correlation, movement. Okay? Do not forget to use this if you're trading with more than two pairs. Stella is asking, how should we trade based on correlation? Stella, you cannot trade correlation. You need to use this information, which I am providing to you to trade. You use your system to trade. If your system, Stella, says that you should go on Euro dollar, and if your system says that you should go long on pound dollar, then you just need to check correlation. That means that the pairs are moving in the same direction. Pick one pair and trade. If your system is saying that you can go let's say, long on Australian dollar, but also it says that you can go long on Euro New Zealand. You need to you can go long because the correlation is not so strong. But you should definitely check during the trade if this correlation moves to a deeper negative territory. But never ever try to trade opposite pairs. It's called unnecessary hedging, right? So if you see that the pair and your system is telling you go long on New Zealand yen, but go long also on Euro New Zealand, then something is wrong. Something is wrong because New Zealand yen and Euro New Zealand have strong negative correlation. That means if New Zealand yen goes up, Euro New Zealand will go down. Think about it. Okay? Let me show you red description. Now you can see all description, green, blue, orange, red. Do you see this? It says red very strong. You should see this. Yeah, so red is very strong correlation. Guys and girls, traders, this correlation table should help you and help your system to find entries for pairs which move or don't move at all in the same or opposite direction. It means that you will be safeguarded versus double exposure and unnecessary hedging. And usually if you take GBP dollar trade, why would you take euro dollar trade? If you took GBP dollar long and you see that it's moving totally in the same direction as euro dollar, I really don't see a point in trading long GBP dollar and euro dollar. What if you're wrong? It will be double loss. Just raise the leverage on GBP dollar and that would mean the same as you were trading both GBP dollar and euro dollar. Look the correlation. But if you see that GBP dollar and euro GBP has a very low correlation, even if you open GBP dollar long and euro GBP short, you still can win because the correlation is not strong. So this is a tool which helps you to make trading decisions within your own system if you trade with more than two pairs. It will definitely help you, I'm sure about it. Okay? The question, can I tell something about GBP-OD? No, not at this point. GBP-OD, I will be taking a look at pairs on Monday session recap, guys. So, of course, sign up for session recap. That will definitely be another chance to grab some pips. Not now at this point. So Monday will be session recap, so I will be talking about trades and trade setups. A question. Now I can see. Let's see the question. Primož is asking. One moves up, other not yet. So go long, other to catch up. Well, for example, good question. For example, you're trading GBP dollar and you want to long, let's say, and you want to take euro yen long. Now, GBP dollar is going like this to the upside. Euro yen is still going to the upside, but not as strong as euro yen. If you see that you can go, let's say here, if you can go long at this point, okay, GBP dollar and euro yen. So this is additional cue that you will be safe with going euro yen. Because if GBP dollar is going up, euro yen maybe will go up, but not at the same strength, not at the same it will not be the same movement. But yes, it will be another confirmation. If you have a euro-yen signal to go long, that's good because it will follow GBP dollar. But be aware where you get the entries, guys. Okay? Law is saying using Admiral Marquez Supreme Edition and happy about it. Thank you, Tarantula. Bye. Yes, thank you, Law. Of course, I'm glad that you are happy with this, and it was great. New Zealand yen. Thanks. Yeah, thank you, guys. Definitely. Yes, New Zealand yen was. I will show you the screen. So this is how it looked like. It was definitely a good example of trade. Let me quickly change the screen so it is much better to see here. Here I will switch the screens now. New Zealand yen. Yes, I will comment, no problem. So this is my New Zealand yen analysis from today. So what did I say? New Zealand, this was the time where I saw the price coming. I was making the analysis where the price was here. Then I predicted that the price will reverse from this point and go up. It definitely reversed from this point here, and it went here to this point. But what happened? Euro dollar and New Zealand yen were in positive correlation, high positive correlation. So when I saw that euro dollar is going up, I was definitely sure that New Zealand yen will also go in the same direction. Okay? And this was the analysis I did today. Okay? Ascending scallop forming. This is ascending scallop. This is the handle. This handle kicked in here and was rejected. So this is ascending scallop. This is the handle with Camarilla MACD trading method. The good analysis and good signal, definitely. I loved this trade today. Another question is it okay to trade pairs that are negatively correlated at same time? Douglas, you can do that. But that means that basically, yeah, you can do that, but sometimes it means that you are hedging your position. For example, if you go short, if you go short on euro dollar and Australia dollar, that means that if you're right, both of your trades would win. But if you trade Euro New Zealand with GBP dollar with minus 43, then you need to know what to do. If you open GBP long and Euro New Zealand short, if you're right about, for example, GBP dollar, because GBP dollar is stronger as a major opposed to Euro New Zealand, you would be right, yes. Because if GBP dollar goes up, Euro New Zealand will follow. So yes, your answer is correct. But if you open GBP dollar long and Euro New Zealand long, one of those trades would probably be negative. So if you go with negative correlation, you can go with one long and one short, because if you are right in the trade, then usually both positions will win. Okay? Jonat says some tips for GBPOD. Yeah, Jonat, GBPOD, as I said, GBPOD, we will take care of GBPOD and other pairs on Monday if I see a good setup on GBPOD and analysis. Okay? So let's wait, guys. Okay, I don't see any questions, so I think this is everything is clear. Okay, no more questions. So guys, use correlation table, download it from Admiral Markets trading room, your own trading room, download it as Supreme Edition, and you will be having this tool, which is great. I hope that this helps you in trading decisions, and I will be talking to you very, very soon. Again, tomorrow, mutual webinar with Chris, and on Monday, session recap. Until then, I wish you to follow the analysis on Admiral Markets website, Forex Street, Forex Factory, but most of the time, it's firstly published here, but follow this and you will be safe. Thank you for listening. Thank you for your comments. Use correlation table again. Do not trade without it. And your multiple trades will be safer. I wish you a great week. Cheers and talk to you soon.